The dollar is going to crash, and this is because the inflation bubble has been pricked. So there is really no way to stop it from deflating. You must have heard that the Federal Reserve is winning the war against inflation. However, according to Peter Schiff, the CEO of equities fund Euro-Pacific Capital, the Fed isn't winning the war. It is losing and will ultimately surrender to inflation. Peter has said that for the next decade, pretty much everything that worked while the Fed was inflating the bubble will no longer work out. He continued by saying the bubble has been pricked, and despite whatever effort the Fed may pursue to prevent it, it will still deflate. Clearly, we have a huge inflation problem, and we've had this problem for a long time, and Peter thinks that sinking price levels will aid in pushing the economy into recession, as he also openly anticipated the 2008 housing catastrophe. According to a recent report from Fox Business, a robust economy doesn't cause inflation. It actually has the opposite effect because a strong economy indicates they are generating more goods and services and expanding the supply. Keep in mind that inflation isn't merely higher prices. Peter gave a proper definition, saying that it is an increase in credit and money supply, as people can use credit to buy things and bid up prices. He also added that the Fed is making no real headway in its battle against inflation. They are raising interest rates, but consumers seem unconcerned. They are just taking on more debt by borrowing more money and spending more money. Therefore, as credit becomes more readily available, prices will continue to rise. So along with enormous federal debt, rising consumer debt will complicate the Fed's efforts to control inflation. Credit card debt alone increased by 15% in 2022. Meanwhile, in the past 20 years, it was the largest growth year over year. Peter also said that with the US government's enormous budget deficit persisting, interest payments on the debt increased by 41%, and he added that nothing this bad has ever been accomplished before. And of course, he made reference to the 2022 federal decision and said that the government combined its monetary and fiscal policies in the worst way possible. Imagine if we had $1 trillion worth of stuff dumped into our market by trading partners. And how did we pay for all this? We didn't. Instead, we printed additional money and traded it for things made by people all over the world. And to make matters worse, the majority of the money Americans spent during this time wasn't even their own. Rather, it was simply given to them by the government. Money was handed to people so they could purchase things and services they weren't generating. And where did that money come from? Well, it was printed by the Fed, Peter answered. He continued by saying the only options available to the Fed are a risky choice or a worse choice, leaving them stuck between a rock and a hard place with no way out. Fighting inflation by allowing interest rates to rise and fall is a bad choice. Even worse is to keep causing inflation, which will eventually lead to hyperinflation, but regrettably, they are likely to select this option. So where do you go in the current inflationary environment if you want to get out of overvalued US stocks? You should avoid businesses that operate solely on faith and prayer and make no money, according to Peter. You should also consider investing in undervalued international stocks. You sell US stocks and invest in better valued businesses that are profitable, not just in the future, but at this very moment. Find businesses that sell their products, produce money, and provide dividends. This is all financial advice given by Peter. Peter added that you should also sell your US dollars because the Fed has no plan to keep them from falling in value, and inflation will reduce the dollar's purchasing power. You should also dump the currency and invest in inflation-hedged securities, and gold and silver are the obvious ones. Schiff predicts that the values of these precious metals is going to skyrocket, and we're going to have another leg like the one we experienced from 2001 to 2011, when gold was nearly 5 times what it is now. Peter said tech stocks should be avoided because they are outdated and have only been successful in the past. He confirmed the need to get high-quality dividend-paying stocks and make them the majority of your portfolio because inflation will get much worse, and the economy will get worse, and we won't be able to stop spending. Therefore, it is even more crucial that your portfolio is stagflation-proof to shield yourself from the impending hyperinflation. So start your preparation now and let us know down below in the comments what you think about this video. And of course, don't forget to subscribe, like, and turn on notifications to keep up to date on everything going on and get more details on finance. We'll see you next time.